This is the Friday, December 27, 2019 version of the Market Plus segment. Joining us once again is Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Delaney.
Tom, I'm going to kick it off here with a question I know about U.S.-Chinese trade negotiations, because we did get a lot of questions this week about that on social media, and it seems like they want your opinion. So I'm going to kick it off here with a question from Jared in Oklahoma on Twitter, and he wants to know how long after any trade agreement is reached before we realize the impact of incentivizing relationships between our biggest customer and our biggest competition will be.
Well, I think we're going to have to wait through and see how the South American crop develops. I think that's probably going to be the key to it in my mind. If they come along and have a big crop, I assume Brazil is what he's talking about primarily, or in Argentina. If they have a big crop, and that probably is going to mean that their prices are well under ours, and I'm of the opinion that I don't know that the Chinese are willing to maybe pay up a little bit to have an agreement with us. They've historically been pretty good traders, and I'm not sure they're going to pay up a lot to buy U.S. products if South American products are substantially cheaper. So we've got a window here where we're about the only suppliers of corn. The problem is they don't tend to buy that much corn, so it's really, in my mind, it comes down to beans. And in late February, there's going to start to be those early planted Brazilian beans available to be exported. Now, they've bought enough beans from us already to sort of bridge whatever gap they might have into that time period. So I guess that's what I'm going to be watching really closely in February, March. Lately they've been switching a lot of their buying to South America already, in spite of all this trade agreement talk. So if that continues and our exports fall off as we go into that February, March period, that to me is not going to be a good sign on the good that may come from that trade agreement. As I said on the show, it's a 2-year agreement, so it doesn't necessarily anything have to happen. But I think he makes a good point. Is we're going to have to see how that good supply down there matches up with this trade agreement that we've got.
So just to clarify, Tom, we did have a question here, and I'm not going to read you the whole thing because you basically answered it. I just want to clarify that you think the more impacting fundamental, I suppose you could call it, for the soybean complex is what's going on in South America and the Chinese purchasing, rather than the signing of the U.S.-China trade agreement.
I do, because there's no quantities put in that. If there are, they aren't going to be published, so we don't really even know whether they're going to buy beans or whether it's all going to be pork. Is it going to be ethanol? Is it going to be DDGs? Is it going to be cotton? What is it going to be? It's all guesswork, really. And if it was me, I would buy the product that was the cheapest. And if that's South America, fine. And plus, I'm not sure that they're all that incentivized to help Mr. Trump get reelected. I mean, they're going to sign an agreement because they may think it benefits them, but I don't know that they're in that big a hurry to help him out. So maybe they just drag their feet till after the election and see how it goes. I mean, there's a lot of moving parts here. That need to be watched pretty closely.
Tom, another market that has a lot of moving parts is the wheat market, as we talked about on the main show. We've got another question here from Glenn in Bryan, Ohio, wanting to know, the Chicago wheat market is clearly making a move into some unexpected territory on the charts. Other than historic trading for wheat, why should we view this as anything different than year-end positioning for all the commodities?
I don't think we should. Like I said on the show, I think you get up in those summer highs on the wheat at 573. You have to be a seller. The short covering is going to get cleaned up here, and that's what he's talking about. A short covering, everybody sort of getting evened up for the end of the year. And then wait and see how it goes. Somebody said the other day there's no reason for the funds to be short corn. Well, there is, because we could have a huge crop next year. Demand for corn is lagging way behind. It's nice to always be friendly and hope things go up all the time, but there is a compelling case to make for corn to not go very far here. And same can be said for wheat. Somebody's producing wheat every 2 or 3 months around the world, and most of the time it's a weed that grows pretty well. So you don't want to get too carried away on the upside in the wheat market either here.
And I think a lot of that is because so many people are putting so much positive sentiment on this January 10th report, Tom. Not to be bearish or bullish, but do you think we're placing too much emphasis on that upcoming report?
Well, like I've said, anytime you rally in anticipation of a friendly number in the report, that means that report has to be even more friendly than we've already anticipated, and that's really hard to do. A lot of people think the USDA is way off. Historically, they're not off by that much. So you lose a couple bushel per acre and a couple 100,000 acres of ground, and that's offset by 100 to 150 million bushel offset in corn on demand export demand that hasn't shown up. Maybe it's a big nothing. If that's the case, we rallied and win for nothing, and then we set back a little bit. Now, I'm not saying we're going to completely fall apart, but that may be all the rally we get for a while here.
Tom, we're about to turn over a new calendar year here, so we've got just a couple questions to wrap us up for today. Looking at 2020 and the crop year that's coming, we've got one here from a farmer in South Dakota wanting to know, which commodity do you see as the best bet in 2020?
To sell or buy?
Wasn't specified, so I'll let you take that one.
My best bet is to sell new crop corn in that 4 to 420 range. To me, if all those prevent plant acres come back in, and you have to assume we're going to go back to having normal trend line. I mean, you can't use 2019 to me was an aberration with all the wet troubles we had. And you think about it, think of all the problems we had in 2019 and still produced a pretty darn good crop. So if we bump that acreage up to what those prevent plant acres pulled it down, I just think we're going to be buried in corn by next fall. So to me, my big deal would be to sell new crop corn.
And
beans,
Tom?
I don't know. There's a lot of uncertainty about beans. We got China in the mix there. Maybe they've got a little more upside than beans, so I'm not quite as certain on that. But my trade would be to sell these corn.
And Tom, we've got one final question here. I guess people must think that you're pretty bearish usually on the show, because we've got a question here from Dana in Osceola, Nebraska, wanting to know why you've been so bearish in the past year, and do you see any change in that feeling going into 2020? Because
the U.S. used to control 70% of the corn in the country, not in the world. Now we produce 30%. We aren't what we used to be. Ethanol's topped out unless China bails us out. Export demand has been awful. We produced the daylights out of corn under a wide variety of conditions, and beans too, for that matter. So we're just overproducing and not consuming enough. So I think you're in for 5 or 6 years of flat corn prices that give you little opportunities to sell corn above $4, which we almost always have. But looking for moonshots all the time just doesn't add up to me. I mean, I'm primarily involved with risk management. Well, being long corn and beans all the time isn't risk management when you're producing it. So that's why I've perceived, I think, as being bearish, but my deal is risk management. So that turns out to be selling, which, I guess that's a bad, awful thing, but that's the way I come down.
Protecting themselves for 2020, what would you recommend folks do? You said sell. Do you have anything else to add to that?
No, I think interest rates are flat. I think you get your long-term interest rates locked in. Do whatever you can to get your costs under control. I think that's about all you can do. Sell good rallies where you think you can make some money, and then produce a heck of a good crop, because it's yield usually that makes or breaks us in the farming business. So that's what I'd work on doing.
All right. Well, Tomm Pfitzenmaier, thank you so much for joining us for our last show here in 2019.
Okay, thank you.
Join us again next week when we'll look at the biggest stories of 2019 in rural America, and Ted Seifert will join us at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.